As a sector, because we started on a very positive note. The dollar index has come off its high. We did see 7-week highs in the previous week itself after the kind of data that U.S. led out. But with the bank's concerns, we've seen dollar index decline. The tangible commodities have seen some buying come back. That's the dollar index for you, 0.5% of a decline onto that one. And we also are looking at the U.S. payroll data. While it was higher than the street expectation, but not as blisteringly strong as we saw in the month of January. And that clearly has been supportive as well. Apart from that, the U.S. banking crisis now has pushed the Fed into softening hawkish stance, is what the markets believe. So last week, while there was an 80% of a probability of a 50 basis point rate hike, now there is a 70% probability of a 25 basis rate hike. So that's how fast it really seems to be changing there. So when you look at the steel prices, we're trading at an 8-month highs. Iron ore prices trading at a 7-month highs. The Chinese demand also seems to have improved, especially as we are getting into a peak construction season, which begins from next quarter. And then it also is about the expectation that China will announce more fiscal support as it has pledged and reiterated. That is what also seems to be supporting markets. In precious metals, you have gold prices trading at a 4-week high. Silver is trading at a 2-week highs. Copper prices have jumped up quite strongly as well. So we are back above $4. Crude prices, which fell 4% in the previous week, also are trading on a firmer note here. Here as well, what else is supporting the crude is the fact that the U.S. oil and gas rig count is now at 590, which is the lowest since June. So there is lower supply that we've seen come in from U.S., much of the record highs that we saw in the pre-COVID era there. But what the street will clearly watch out now is the U.S. CPI data that comes in on Tuesday, and that's going to be the most important event ahead of the U.S. Fed meeting. That's on 22nd of March.
As long as we don't have any more bank failures before that, right? Jobs data was